And people are going and buying gold, George.
Oh, my goodness.
Banks are going to fail. It's like they live in the Wild Wild West or something. You don't know how the FDIC insurance works? The entire federal government would have to fail for you to not get your money out of your bank when you have less than $250,000 in your bank.
That was a clip from the Dave Ramsey show about a week or so ago. I just love that. Banks are gonna fail.
Banks are going to fail.
Well, there was 2 banks that failed. Here we are at the FDIC.gov failed bank list. And I want to sort of do a recap on the bank failures and also talk about something that's going on, which is perhaps worse than banks failing. So let's do it. Buy your gold and silver online from SD Bullion. New customers get gold or silver at spot by visiting sdbullion.com/new. Thank you so much for watching my video. I do sincerely appreciate it. So if we look here, we can see in the last 2 weeks, there have been no more bank failures. So here on the failed bank list, they have Silicon Valley Bank on March 10th. And we know this was the second largest bank to ever fail in U.S. history. And then just 2 days later, on March 12th, the third largest bank to ever fail in U.S. history. That is Signature Bank out of New York. And no more banks have failed since then. However, what I want to talk about in this video is what the Fed is actually doing, which is something that could certainly be worse than banks failing. So let's check that out. Here we are at shiftgold.com, and this article just came out today. The headline reads, Fed adds another $94 billion to its balance sheet in week 2 of bailout. So many of you know the banks were bailed out. They essentially told the banks, look, we know only up to $250,000 is insured for each person or business that's banking with us. But the FDIC and the Fed said, look, we're going to insure all of the deposits. So if someone had $1 million or $10 million in the bank, you're going to be able to have access to all of your money. And when they do that, they cannot do it without consequence because someone has to pay for this. Right? Who is actually paying for all of the money to be in those bank accounts? It's not like they can just create currency out of thin air with no consequence. Now we've seen 2 weeks where they've added billions to their balance sheet. You can see that uptick here. I mean, during COVID, obviously there was a lot of assets that were added to the Federal Reserve balance sheet, kind of started dwindling off when they were hiking interest rates and things of that nature. And then now we're seeing this massive uptick just over the last couple of weeks. We're still not up to that peak where we were during peak inflation times, but we're headed back that way. So if we dig into the article here, in the week before it raised interest rates another 25 basis points to fight inflation, the Federal Reserve added more than $94 billion to its balance sheet. This was on top of the nearly $300 billion it piled onto the balance sheet in the first week of its bank bailout. The balance sheet reveals that Fed has loaned banks nearly $400 billion in money created out of thin air in just 2 weeks. In other words, it's created nearly $400 billion in inflation while pretending to fight inflation. That's literally what they're doing. They're trying to fight inflation, right, by raising the interest rates, but then they create $400 billion out of thin air. This doesn't make sense. And we could see another photo here of the all of the assets added to the Federal Reserve balance sheet, that $400 billion. It's a small little uptick on this chart, but I mean, we're nearing the peak, right? We're headed that way. And certainly if they need to loan more money to the banks, we could surpass that and continue on up from there. But after the failure of Silicon Valley Bank, the Federal Reserve announced a loan program that will allow other banks to easily access capital to help assure banks have the ability to meet the needs of all their depositors. Check this out. Keep in mind, the bonds pledged and collateral don't show up on the Fed's books unless the bank defaults. So while the Fed can plausibly argue that they aren't engaged in quantitative easing, the effect of this loan program is exactly the same. The central bank is creating new money out of thin air and injecting it into the financial system. This is just so absolutely insane, but it's not even the craziest part of the article yet. We're almost there, but I want to point out that the Fed has been saying for months and even years now that they're trying to fight inflation, and they've been raising interest rates. However, when they start engaging in quantitative easing, which is essentially the opposite of fighting inflation, they're basically playing tug of war with themselves, and they're guaranteed to lose. And here's the bombshell part of the article right here. As Peter Schiff said in an interview on NTD News, this is how Americans are going to pay for these bank bailouts, the inflation tax. And when President Joe Biden claims Americans won't pay for these bailouts, he's lying. They're going to pay the cost through higher prices. And when he says that everybody's bank account is now safe, it's not. It's in more danger than ever before, because your bank account is going to be eroded in value because of inflation. So even if your bank doesn't fail and you don't lose your money is going to lose its value. Right there, that quote from Peter Schiff. That's the big part of the article, in my opinion. We are going to lose purchasing power because of inflation when they bail out the banks. That's what's happened. Even if you left your money in the bank, you felt safe, okay, no big deal. Well, that money is going to be able to buy you less things tomorrow than it can buy you today. So why are you leaving your money in the bank? This is what I've been saying for years. You should not leave your money in the bank. What I do, I actually have no money in my savings. I made a video about this a couple of months ago. I have literally $0, 0 cents in my savings. All of it I pulled out. Now, I do have some money in my checking because I got to pay bills and things of that nature. But other than the money I need for this month or maybe a little bit extra, everything else is out. All of my money is out of the bank. And what I've done is I've purchased physical gold and physical silver to protect myself. It's so funny. At the very start of this video, I played that clip with Dave Ramsey saying, oh, people are going out and buying gold. It's like, why are people going out and buying gold, man? Because they're worried about the banks failing, they're worried about inflation, and they want to protect themselves. So in my opinion, it's smart to be going out and buying gold right now. That's what I've been doing for a number of years. I just want to read this last paragraph. The problem is that even if they manage to thread this needle, something else will break in the economy or the financial system. It's only a matter of time. This economy was built on artificially low interest rates and easy money. Without that foundation, the house of cards will eventually collapse completely. So there it is. Something else is going to break. Something else is going to fail. We're going to go into this deeper recession than we are now. Perhaps we'll go into a depression. No one's going to have a job. It's just going to be insanity out there. So there's lots of things that could go wrong, but you can protect yourself. You can get out of this system, get out of the fiat currency system that is doomed for failure since the start, and get into something that is more secure, more safe. These few banks that failed a couple weeks ago certainly are opening people's eyes to what's going on. And although we haven't seen any more banks fail since, although some were close, something worse is going on. The Fed is creating more currency to the tune of $400 billion to bail out these banks, and we are going to have to pay for those bailouts in the form of the inflation tax. The classic definition of inflation is simply expansion of the money supply. So when they create more currency, we're going to see more inflation. So that's the bad news. But again, you can protect yourself. I'm going to end the video there. Feel free to put your comments down below in the comment section. I want to say a massive thank you so much for watching, and I'll see you all in my next one. Silver Dragons out.